fact, Nifty small cap index is in the red. So that's the extent of outperformance large caps actually are seeing. So how should you be formulating your your market strategy in such a raging bull run? We have Anshul Saigal joining us, not from Kotak KMC PMS, but from Saigal Capital. Anshul, great to have you donning a new hat. How does freedom actually treating you?
Ajay, thank you very much for having me. It's a pleasure to be speaking with you. Always a pleasure, and thanks for your good wishes. It's a new role. I've obviously been in the thick of things while at Kotak PMS. This is slightly more relaxed, but also it gives me that freedom to stay slightly away with an arm's length, and then think about the markets in a different perspective. So I'm enjoying this avatar as well. The passion remains the markets, and I'm enjoying the process just now. Thank you again.
I'm sure. And you know, this is a game where if you're relaxed, you have more time at your disposal, then you can take much sharper and accurate calls in the market. So let's talk about the market. It has completely changed complexion in the last 2 days. Who would have expected 2,000 point rally on the bank Nifty? Let's start by financials, because I know you are bullish on financials, but which pocket of the financials you find a good growth available at not so steep valuations now?
So if you look at financials over the last 2 years in general, particularly the banks, you will notice that aside from a few banks which have done well in this period, largely the large banks have consolidated over the last 1.5 to 2 years. Whether those are PSU banks or they are large private sector banks, they've consolidated. And in this time, we have seen for the first time in nearly 7 to 8 years that credit growth in the Indian financial sector is picking up and has crossed 15% from a very pedestrian 5 to 6% that it grew for nearly 6 to 7 years. This credit growth has to reflect in growth of credit for these banks. And if that plays out, and of course, this is a new cycle which is playing out, so the NPAs are also behind, at least for the moment. If that is the trend that we are seeing ahead, then these banks, many of these banks trading at single-digit price to earnings multiples, at one-time price to book, they look like a steal. So consolidation in banks is attractive. We do think that even in housing finance companies, there has been substantial consolidation over the last 1 to 1.5 years. And that itself presents opportunity even in those spaces going forward. So financials look interesting. Many banks have attractive valuations for the growth that is going to come ahead. And so one should be looking at this space for sure.
Anshul, the narrative now building that large caps is where we should bet on. You have much more better valuation comfort, and mid cap, small cap, which run up a whole lot, should be avoided. You know, at best, some profit should be booked there. Do you agree with this hypothesis in the run up to the elections?
If you were to look at the monolith, that is small caps and mid caps, and then compare to the large caps, then it's quite evident that small and mid caps, the way they've performed over the last 7-8 months, anywhere between 35 to 40% returns at the index level, and stock specific, anywhere from some stocks are up 3-4 times, 50 to 100%. Clearly, there is a lot of upside which has already got built into many stocks or many pockets within the small and mid cap space. Having said that, I must say that given that there are mini cycles playing out within the markets, there are many pockets where this sort of froth is yet not there and where valuations remain favorable. For instance, given that rural economy has been weak over the last 2 years, we are seeing rural discretionary stocks actually down 30 to 50%, while you are seeing the markets at all-time highs. Similarly, if you look at chemical plays, both in the small and mid cap as also in the large cap space, those stocks are off meaningfully from their all-time highs, as also two-year highs. And then many IT names. I mean, look at the IT space in general. It, of course, gave phenomenal returns in 2021, but since then it has consolidated meaningfully. There as well, we see opportunity. So, looking at small and mid caps as a monolith, you will want to stay away. But if you look at bottom up opportunities, stock specific, sector specific opportunities, there are many to be had. In the interim, if there is a market correction, so be it. But over a period of time, these valuations will play catch up with earnings, and that's where opportunity lies.
Right. So, Anshul, how are the earnings looking of your portfolio, which I'm assuming would be a mix of mid and large, in terms of visibility for the next 3-4 quarters, the earnings growth?
Um, so, Ajay bhai, as we have spoken before, we are very bottom-up, stock-specific, arbitrage-chasing investors. What I mean by that is that we are looking for opportunities where growth is not priced in, and where valuations are reasonable, yet growth is about to play out over the next, say, 1 to 2 years. And so, in our portfolios, earnings growth looks north of 25% for the next 2 years. For valuations in the range of 15 to 20% for most names in the portfolio. And so the PEG of the portfolio looks quite attractive at about 0.6, 0.6 and a half, 0.65 kind of levels. We think that as growth plays out, these names will actually unlock value over the coming few quarters and years. Even at the market level, we think that if we just take the recent quarter and we look at how earnings have played out, after a really long period of time, take away the COVID period because that was a sort of a distortion. But aside from that, over a really long period, for the first time, we saw earnings upgrades to the extent of 1 to 3%. So clearly, earnings surprised on the upside in the last quarter. And our belief is that this cycle, if it is only just starting, that is the capex cycle in the Indian economy, then over the next 1 to 2 years, we may see much more of this play out, earnings surprising on the upside in many segments, pockets of the market. And that will give tailwinds to the markets and individual opportunities in times to come.
The other point you were making earlier in our discussion, Anshul, was that the one sector, manufacturing, particularly capital goods, is in that phase right now. Despite of the last 1 year of rally, what IT was some years back, are you seeing such a large structural argument playing out for this space for next 6 to 8 years?
Let me give you an anecdote, Ajay. I was speaking to a CFO of a company that provides manpower to various industries, and their mainstay has been the IT sector so far. Now, the commentary that the gentleman gave me is that till about 2 years back, the total manpower supplied to the manufacturing sector from their company was about 5,000 odd people, and that today has risen to 65 to 70,000 people. And he says that this is only scraping the surface. This number is likely to go beyond 1 million over the next 5 to 6 years. Now, that tells you that if there is going to be so much demand for manpower from the manufacturing space, then clearly there is activity on the ground which is leading to this manpower requirement. Our belief is that India has lagged meaningfully over the last many decades in manufacturing, while India has done very well on the services side, IT side, but on manufacturing, India has lagged meaningfully. Even to the extent that simple furniture that was required in India was imported. We believe that this is a transformational phase for manufacturing in the country, with schemes like PLI and a general push towards Make in India from the government. We will see this decade being a decade of manufacturing, and industry is gearing up for that. For now, say in electronics, we are only just assembling. What happens when we start manufacturing panels for phones and iPhones and iPads, etc.? what happens when we start manufacturing semiconductors? That is when the real manufacturing prowess of this country will get tailwind. And our belief is that we are only at the start of this phase. This will involve significant investment, and it will also involve significant growth for the small and mid cap space, as also the general industry in manufacturing. So we are very positive on this space over a 5-10 year period. Short term, there will of course be cycles.
Right. All right, Anshul, we'll let you go on that one. Thanks so much for joining us on the show today. That was
My
Anshul
pleasure.
Saigal.